Hello, everyone. This is Rob Roy of EWO Options, and welcome to TradeFinder Live. If this is your first time watching us, welcome. For those of you that are watching on one of the live streaming services, YouTube or other social media outlets, welcome to you. Welcome to our subscribers. Welcome to everybody. So hopefully you've had a good start to your week. As you know, if you've seen any of our recordings, we have to go through and show you this disclosure/disclaimer. It is a requirement. So please, if this is the first time that you've seen it, read it in detail at your leisure. Most important thing that the powers that be want us to make you aware of is that we are not registered to give individual investment advice in the United States. And they also want you to remember that any pricing that we're talking about is assumed to be in US dollars unless noted otherwise, because we have a lot of international viewers, a lot of international subscribers as well. So again, if this is the first time seeing it, it's important. So please take a screenshot of it, read it in more detail at your leisure. So welcome to TradeFinder. This is what we're going to cover in TradeFinder. We talk about the markets, not just the US market. That's how we started with this, but with all the international subscribers, we've been asked to look at a lot of the different international markets. So we do that as well. When we do cover the international market, don't tone out if you're just wanting to trade on the US market, because there's a lot of patterns, and the securities that we show can be traded on the US market. So you can trade another country's market on the US exchanges as well, if that's something that you're interested in doing. So pay attention. If you've been watching the DAX of lately, I mean, Elliott has just nailed the DAX, could have made a ton of money just trading the DAX over the last 6 months or so. Then we'll look at a review of any closed alerts that we may have sent out to our EWO Options subscribers, give you an idea of how that service works. We'll look at a review of the case study considerations that we've identified here in past TradeFinder sessions. We'll look for one tonight, and with whatever time remains, we will open it up to a general Q&A that usually amounts to you guys asking your favorite stock symbol, and then we kind of give you our view of what our technical indicators say about it. And you can talk about general other topics as well throughout it. But in generally, that's how TradeFinder works. So with that, I'm going to go ahead and start the look at the charts. And you probably noticed that we did open pretty much flat on the day, traded higher. And as we put on the 10-day moving average, you can see why we kind of stopped where we did. We got awfully close to that 10-day moving average, recovering the oversold condition that we had at the close yesterday, and then closed down near the low of the day at the end. So the two zigzag patterns that we've been talking about remain intact. And if this is by chance one of the first times you've seen us, I'll go ahead and show them to you. Here's the big zigzag pattern starting from the completion of that wave 5 impulse pattern. And this is one of my favorite zigzags. When you have a 61.8% B wave correction, look for 100% extension, which brings us down right towards the 400 level. And we've also been talking about there's a gap that was created way back in April of last year that is yet to be filled, and completion of this zigzag pattern would fill that gap. And then taking that zigzag off, there's another one. So it's a complex C wave. So there's a pattern within a pattern here, which is typical Elliott wave stuff, where another 61.8% B wave correction brings us just below the 400 level. So that's two different zigzag patterns telling us that we're going to trade down likely to the 400 level. Now at that point, everything changes. So the zigzag pattern is satisfied then, and you take a look at your indicators to see what's the likelihood that you do an extended C wave, or is that it? That's the end of the pattern, the completion of it, and then we start to look for a new impulse pattern to be delivered or created at that point in time. So we've been posting videos saying that we look at the VIX, etc. It doesn't look like the market's downturn is done yet. I still say that that's the case, because both of these zigzag patterns are still in play. So I don't think that anything here on the US market is showing us that we could turn and head back to the upside. If there was anything, it could have been that where we closed yesterday was at an area of support. Forget the low that we opened on when the war started. rallied back up from there. So there's a little bit of support here at 420. That was an area that was a completion of an Elliott wave pattern going all the way back here again to April of last year. So we completed that at 420. We talked about that. There's videos again. If you're viewing us on YouTube, please go to our YouTube channel. You can see the most recent video, and then you can go back and look at some of the ones in the past and look at our calls. Look at how Elliott wave has been so accurate on predicting the market. It's all right there. And none of this is Monday morning quarterbacking stuff. These are all calls that we made in the beginning. And it's just come to fruition pretty spot on. Lots of zigzags to the upside as the market was rallying. And now we're looking at whether or not we complete this zigzag on the market's move back to the downside in corrective mode. So let's go ahead and take a look at the VIX. Kind of usually save that for later on, and just the amount of time that the VIX has stayed above 30 is really amazing to me. You can see that we just have a pretty good uptrend there on the VIX. And it has its own Elliott wave pattern. It's disqualified though, so you can't look at that and say, oh, the VIX is going to 45. Well, the wave 4 came down to 83%, so that becomes nullified. So you take that off, and then you just look at, well, we have support in this 30 area. We break that. There's a lot of support around 25. So my point is, I think volatility is here for a while, and we need to get used to it. We're excited about it. Like the fact that we have elevated volatility. All option traders do. So going back and taking a look at the market itself, again, we've given you the targets, and I just don't see any sort of changes to what we've been talking about over the past couple of months, really, ever since the market topped out. That 400 level, people kind of laughed. If you go back, you can look at some of the comments underneath the videos, and there were some people who are like, no way. We're not that far away from it now. And this is a new closing low in the downward move. I mean, we did open lower back there on the 24th when the war started between Russia and Ukraine, but this is a closing low. We closed much higher than that on that day. So significantly different at this point in time. So that's the markets. We'll go ahead and look at some of the rest of the markets. I'd like to look at TNX, give you a look at bonds. And then we'll also look at the dollar as well. And you can see that we came down here. If you look at the last recording, I'm on the last recording, say I'd be really surprised to see the TNX break below 17. I just would really be surprised. Why? Because that's a strong level of support. You can see that area of support right here. And the wave 4 is a good fib level at 38.2% on the fib level. So it still could break below that. I just felt like I would be surprised. We know the Federal Reserve is going to be raising rates. We know they're going to be withdrawing liquidity. Money has come into bonds, the safe haven type of trade, et cetera. But I just still felt like I'd be surprised if we broke 17. And since then, we've bounced off of it. But you can go back and look at that. It's on the recording from over the weekend and take a look at that. So let's look at the dollar. And I had mentioned in previous recordings that with the dollar not moving to the upside, I was kind of surprised about that. I wasn't really sure why that was. Well, that's all been rectified now. You can see the dollar is flown up, and we hit that target yesterday of the wave 5 and said, well, if we get that far, are we going to stop and not go to 100? Seemed like it was logical that we'd go to 100. Well, we're awfully close. The high today was 99.43, so that's awfully close to 100. So that makes sense. Again, the safe haven scenario, money coming into the dollar with everything that's going on globally, et cetera. And then the bastion of last resort, if you will, currency of last resort, that needed to stay intact for the U.S. markets, in my opinion. I think if we lost the dollar, and way back here in the recordings, I was saying I'm a little bit confused as to why we're just in this trading range here with the dollar. Seems like they would have been a bit under the dollar, and that's all been rectified. So usually when things get out of whack, if you will, the norms, the correlations that usually exist in the market and the global markets, they don't stay out of whack very long. Usually they get back in line, and that's exactly what's happened with the dollar. So to me, the only question is, do we actually hit 100 or not, getting awfully close to parity with the euro? That's fascinating in its own right. So that's the dollar. I thought you might be interested in seeing that. So let's look at some of the other markets as we do each and every week. We'll look at the Dow. We use the DIA. I know some of you look at the INDU for the Dow, but we look at the DIA, and there you go with the big zigzag pattern here. Now, one thing that I want you to note on this zigzag pattern is we're a little bit closer to the target on the Dow than we are on the S&P. I mean, we're not that far away on the S&P either, but we're getting in the neighborhood of that 320 level on the Dow. And then if we look at the Qs, you've heard me talking about the Qs, and you just feel like there's nowhere for them to go. Bit of a doji today, but it's almost kind of a gravestone doji, right? A lot of times people say, what do you mean by a doji? So if you're new to the world of technical analysis, perhaps you're new to Elliott Wave, joining us on YouTube or one of the social media services, a doji is when you have an open, then you trade higher, then you trade lower on the day, and the close is pretty similar to where you opened. Now, there's different types of dojis. The normal one would just be looking like a plus or a cross sign. So you have the open and the close right smack through the middle. So it looks like that, where you open, traded higher, traded lower, and close at the exact same price. But where that is makes a difference, supposedly, in the world of candlestick charting on what the doji means. In general terms, a doji means indecision. That's the basic definition of a doji. When you open and close at the same level, it means indecision. Now, people try to read into making directional calls from it. And when you have what's known as a gravestone doji, which means that the doji part, the open and the close, are at the bottom of the bar rather than in the midpoint or the top, it's usually a bearish sign. So that means that even though there's some indecision right now, which you can understand with the fact that we're kind of at those lows there around 320, maybe we're going lower and we're going to head on down to that level below 300. We've got a pretty good wave 4 there at 38.2. So pretty nice zigzag pattern within a wave 5 impulse pattern to the downside as well. So we start to have these multiple patterns. That just is a higher percentage of accuracy. Nothing's 100%. Elliott Wave is not 100%. I'm never trying to say that it is, but it's better than most of the other technical indicators I've ever seen. Is better than all of the other technical indicators that I've seen. And it does give you an edge because it's right more than it's wrong. And we have the empirical data to prove that. We have AI data to prove that that's the fact. So nobody can convince me that Elliott Wave doesn't work. We have the proof that it does, and it works more than it doesn't work. And that's really all you need in the world of trading to give you a little bit of an edge. So the IWM, a lot of people have been asking about that. And lately we've been talking about how it's hung in there pretty well. Again, kind of that gravestone doji look, which is a little concerning for more downside, but it wouldn't be surprising based on the patterns and where we think things are going. We have a wave 5 lower down there around 175. We've been looking to see if the IWM would close below 190 because there's some support there, as you can see. And if it would do that, we would look to enter a downside trade on the IWM. But right now, it's just kind of in a trading range. As you can see here, it's been channeling right through there. And it did that for all of 2021 or 2021, where it stayed in that trading range. We've talked about that numerous times, about the range that it stayed for the entire year. Well, it dropped down and now it's just going through and doing it again, where it's staying in this same trading range here. So looking at that IWM staying in this trading range, if it breaks below 190, we would look to put on a bearish trade. If it breaks below 210 or above 210, excuse me, then we would look to see where the new wave 4 would be. Right now, it's at the 38.2% fib level, but it could go up to 50% or even 61.8 and still keep the 5-wave impulse in play. But right now, it seems intent on just kind of channeling for a bit. So in a way, it's acting better than a lot of the other markets are acting. Bitcoin, and kind of talked about how Bitcoin had moved up towards the 44,000. It looked like maybe we're going to break out of that. I've talked about this so many times on the recordings that 4 is the magic number for whatever reason. With Bitcoin, every 4,000 there's support resistance. So you got 44,000, and then you come down to 40,000, which it's desperately trying to get back above. If it can't, then it's going to come back down likely to 36,000, which has held really well over the last couple of months, because if it breaks that, then we go down to 32, which is the next level of support. And if we break that, then we're probably looking at our wave 5 target down around 24, which is again 8 below. So 2 more steps of the 4, if you will, the magic 4 level on Bitcoin. So churning sideways, I think, is a positive thing for Bitcoin. We talked about how we had that conversation on the halving, H-A-L-V-I-N-G. I just struggle to say that word. I did it in the video too. But apparently from the programming and the way the mining works, that you don't get another halving until 2024. And that's usually followed by a bull market in Bitcoin once they go through that process. So maybe we just churn for a while in Bitcoin before the next real strong bull run occurs. But right now we have a wave 4 set at 38.2%, and we're kind of forming a bit of a channel here with Bitcoin as well. So it could have kind of broken out of this at 44,000. A lot of speculation that was just people getting ready to see if Bitcoin was going to catch a significant bid. Maybe the people in Russia, et cetera, were going to use it as some sort of a currency because they got cut out of the banking SWIFT system, et cetera. So all those things were interesting, I think, on Bitcoin. And then we'll go ahead and look at the Nifty. We didn't do that in the last recording because we had other things to look at, but we look at these markets a lot. I know a lot of people watch the India market, and you can see that back here, we had talked about this where we had a really nice triangle pattern, significant break to the downside, no labeling of the wave 4 anywhere within here. So we're down here at the 3. So we're either going to make a new low from here. It's trying to hold, as you can see here. The Nifty is trying to hold the 43 level. If it can hold that and create a bounce, then perhaps we can come up here. These are called time and price projections, these boxes here that are black and white. That doesn't mean that the wave 4 is underway. What it means is that, because right now the wave 3 is the current wave. That's the one that's labeled with the circle with the color in it. If we bounce up and that wave 4 becomes labeled, then that tells you that's now the qualified wave, and that's the new wave that's in play. But until it does that, these are just projections. So if the wave 4 were to start, that's about where it would find resistance. And then if it found resistance there, the next move to the downside would come down here. So that's how the Elliott Wave works on the software program. If you're interested in the software, a lot of people ask about it. The charts are super clean. To me, it's the best Elliott Wave software that exists on the market. You can find out more information about it at hubb.com. hubb.com. It's called Profit Source. There's a new version coming out that's super cool. So you'd want to get in and get grandfathered before if you're interested in it. But I just think it's an amazing tool to add to your repertoire, if you will. And then the DAX that I was talking about, if you've seen some of the past recordings, you know that I've been just amazed at Elliott Wave with the DAX. And this is the 3rd time that a wave 5 relabeled to a 3. So we came down, we hit the wave 5 target. It relabeled to a 3. What does that mean? A bounce, and you're going lower. Then it relabeled to a 3 again. What does it mean? A bounce, and you're going lower. So now we've relabeled again. So we had a wave 5 target. It's relabeled to a 3. That's more of a normal doji there, by the way. See how it's kind of more in the middle of the bar where the open and the close, the little notch to the left is the open, the little notch to the right is the close. So it's kind of right in the middle. That's a more traditional look. So does that mean that maybe finally Germany's going to bounce a little bit? Because this has been straight down for the DAX for the better part of the second half of February and first half of March. So maybe we get a little bit of a bounce out of the DAX here and we start to move back to the upside. That would be nice, I'm sure. A lot of people ask about the DAX, so a lot of people trade it, and it's just been brutal as far as the move to the downside. But Elliott Wave has had it spot on, spot on, spot on. Just, I mean, it's like the epitome of Elliott Wave rules, the DAX, the way it's moved. And that's not unusual for ETFs that mirror something larger like an exchange for a country. Elliott Wave tends to work. The more liquidity that exists, the better the more accurate it is. So the greater sampling of people's actions that are going on, the more accurate Elliott Wave is. So you're talking about, Germany's ETF here. So obviously a big market there with the DAX. So just a symbol there. So that's a kind of a roundup of the markets. We have looked at metals recently, but I'm going to show you the trade on the SLV that we actually just closed today for our subscribers. So I'll cover the metals then. So that's going to wrap things up as far as talking about the markets. So as I mentioned, we do take a look at any case studies that we've closed for our subscribers. And here's one on SLV, the ETF for silver. So we closed down the one on gold just before the war started. It was still a nice trade, but yeah, it would have been nice to have gotten that spike on the war, but we still had silver. And what the SLV trade is in our volatility strategy, which are triangle patterns. And I'll show you the pattern in a minute, where you're looking for a breakout. And our newest strategy, some of you may have seen videos of it through various webinars or on the internet, through YouTube, etc., is an AI-based time strategy. And so it's controlled by AI, and it gives you situations for range-bound stocks. Well, with the VIX staying above 30, there haven't been as many signals. There's been signals, but not as many as normal. So we included the volatility strategy for all those that sign up for the time strategy. So if you're interested in that, I would do it really quickly. You can find out more about the time strategy underneath this video, or going to our website, EWOtrader.com. If you're as excited about AI as I am, it's really pretty cool. So go to our webpage or our YouTube page, either one, and find out more about the time strategy, because I don't know how much longer we're going to do this. The VIX isn't going to stay above 30 forever. So this is just kind of something that we wanted our subscribers to have some more trades. And there's this really nice symmetrical triangle that set up there. We like to have a low ADX when we're looking at triangles. So when we have a triangle, we create a strangle. And it's been kind of my claim to fame in the world of options, because I don't do strangles, one strike out of the money on either side the way they're typically taught. We set them up where the delta is right around 25. So somewhere in the 25 to 30 range, because that's where the greatest acceleration is up the delta curve. And that's gamma. Gamma is the acceleration of delta. So when you start to put the math that go into creating how options work, we're putting the math in our favor, meaning that if we break out, and we have to break out when you put on a strangle, stock has to make a breakout move, we are guaranteed to make money as fast as mathematically possible. Now, I want to be really clear on that. I'm not saying we're guaranteed to make money. I'm saying if the stock breaks out and moves, we're guaranteed to make money as fast as mathematically possible, because we have put all the math that goes into the equation for delta and gamma in our favor off of the delta curve. So that was the entry setup. And here's the exit. As I said, we just closed this out today. And if you've heard me do any recordings, you know how I feel about the 10-day moving average. No security in any time frame is very far away from the 10-day moving average. So we had broken above this area here at 23. And then we got the gap up today. So the call option was well in the money, and we have big separation there between where silver closed and the 10-day moving average. We're significantly overbought. We've got a nice little IV spike here in the calls. So it was time to go ahead and take the position off. And it turned out to be a really nice strangle, generating over 100% gain in just 24 days. And we've applied AI to our other strategies as well. And the AI has told us that in that area of around 3 weeks is when you kind of hit your peak performance. So that was also a factor in when to close this one out. So over 100% gain when you didn't have to pick direction. Think about that. you can generate over 100% and you didn't have to pick direction. All you needed was the stock to move. That's it. When you have a triangle pattern, you just need a breakout move. You don't want it to go sideways. And very rarely do they go sideways when you have a well-formed triangle pattern, whether it's ascending, symmetrical, or descending. In this case, it worked out extremely well. So again, this was just a bonus. The volatility strategy that we added for our new time strategy subscribers. So again, if you're interested in it, take advantage of it before we take that away, and it's not a free bonus anymore. All right, so let's go back and take a look at some of our previous case study considerations. And we look at CMC. We're going to take this one off of the bullish side, which went back to January 4th was the webinar when we looked at this. And you can see that we had a pretty nice move, a little bit of a retracement, and then all the way up here. So we're going to close that off on the side for the directional trade. And the reason I say that is we also had this on the 22nd as a strangle, because you can see on that downward move, it created another one of these symmetrical triangle patterns. And since then, we've broken out. So we have a nice doji there again today. Lots of dojis on the charts today, which means that market's getting a little bit indecisive on whether it wants to go straight down or bounce up, I think. And so we're going to give it a chance to move a little bit more on the strangle side, or see if maybe this was a head fake and we move lower. Another reason why you should take the bullish part off. And so we've done that. We did send this out as an alert to our subscribers, and we haven't closed that out yet. So we'll monitor that and see what happens. Just wanted to remind you that in that same webinar, we looked at Dell as a bearish position. And I don't know if I mentioned last week that you should have closed that off if you were following that one, but I wanted to bring that up and remind you that. So big move to the downside there in Dell. And so that was on the same webinar, which would have been the 22nd. So that would have been there was we looked at, and you can see the target there is to go to the previous 4. That's what you're looking at when you have a wave 5 that doesn't reach 100%. You're going back to the previous 4. It did that. So if you're wondering, well, where did all the Elliott wave numbers go? Well, it satisfied that. That trade's over. That pattern's over. So now software looks for where's the next pattern. And once it becomes clear, then it will label it. But for now, it's in a corrective phase. And I've taken the corrective patterns off because I like to draw them on there myself. There's tools over here, the Zig-Zag tool you've seen me using, triangle tools. You can leave them automated on there if you want, the ABCs. I just tend to like to do them myself. I'm a big fan of the corrective patterns within Elliott Wave, then the impulses. So that's my personal preference, but you can leave them on here if you want in the software. So that Dell one's done as well. Now we did look at a couple banking stocks, and we had Fifth Third. Right now we're at a 60% wave 4 correction. So it's obviously moved lower from when we looked at it. So the question becomes, did you want to take this off? If you haven't taken it off already, might as well give that 61.8% fib level a shot and see if we can bounce from here. That's a really nice looking Elliott wave 5-wave pattern to the upside with a wave 4 at 61.8%. So if you're still following this one, if you can break above 42, then you might take off and actually run up and hit that wave 5 target. But if it breaks below 42, you should get out. That would be we disqualified this impulse pattern. And that just means with interest rates going up today and the banking stocks still went lower, that's kind of odd. So we could be going, significantly lower here. So if it breaks 42, exit. If it can bounce from here, perhaps the wave 5 can still go with the heightened patterns that we have within interest rates. And then AGCO, that was set up here. We looked at that one on the 15th of February. So a couple of weeks ago, came down, filled the gap, was running back to the upside, looked really good. And then yesterday happened. Not a good day yesterday for the stock. So it's back down at support. So filling the gap, that was not unusual. I'm a big believer the gaps get filled too. Again, if you've heard any of my recordings or commentaries or whatever, you know that that's my belief. And then rallied back to the upside nicely, but ran into resistance there at 130. And with the downdraft in the market yesterday, it couldn't break through resistance. You look at the moving averages here. Look at that, closing right there. All three moving averages have been kind of close together for a while now. We're not in a 5-wave impulse pattern. So this is just in a trading range right now between 115 and 130. I don't know if you would want to do anything with that or not. And then taking a look at what we looked at last week. Now, this is going to be a really good educational exercise here, because in my notes, I wrote that when we looked at this, we said, if we break above 340. So watch what happens now, because this is a wave 4 here, wave 5 impulse pattern to the downside. But the DMI was showing that, hey, there's strength in this upward move. Perhaps we break high enough that we get above this resistance here at 340, and then we can disqualify this 5-wave impulse pattern to the downside. We might have something working to the upside. And then, boom, the very next day, we did break above 340. But the following day, no follow through. So our subscribers have heard me say this to where they can repeat it before I even start. If you have a break of a major moving average, support resistance, break out of a triangle, etc., the first day doesn't count. You have to have a second day. You have to have a follow through, a confirmation day. And we didn't have that. And then watch what happened. Boom. That's the importance of a follow through, a confirmation day. You need to know that, that has to occur. So it did close above 340 the very next day, but then there was no follow through. And then we broke to the downside. So that one, you should have never followed that one to the upside if you did. And then we also looked at Vivo, and we had a setup here. Now the wave 4 hadn't labeled here, which was a little bit concerning. And I'm going to take the Elliott wave pattern off for a moment, because here's another thing to watch. When you see what happens here, you look at that, and it has morphed into a fairly decent looking triangle. So if you'd follow along with that, we didn't send this out as an alert to our subscribers, but if you had followed along with that, when you saw that, if you had an upside trade on, that would have been a time to adjust the trade into a strangle. I'm a believer that when you have a really well-constructed triangle, it supersedes everything else. That can break either direction. I know in Elliott's works, he believes if you have a triangle within an impulse wave, that the breakout is going to be in the direction of the impulse. And for me, a higher percentage is just play both sides. Why do we have to worry if it's going to break in the direction of the impulse? Just play both sides with the kind of strangles that we do. You saw the result in the SLV, so then you don't have to worry about whether or not it breaks in the direction of the impulse. Just play it to break out, and you got both directions covered. The only thing that would hurt is if it were to go sideways, and they rarely, there's no guarantees, there's no 100%, but rarely does it go sideways out of one of these triangles. So that's a review of what we looked at over the last few. We don't have that many open ones. We've closed out a lot of them. And you can go back and look at past TradeFinder recordings on our website too. And you can see all of the case studies and follow along with them and see what the performance has been. It's all right there and documented on our YouTube channel. So look at all the past TradeFinders and see what's been set up there. All right, so let's go ahead and see if we can find some sort of a pattern to create a case study consideration for tonight. And then we'll open it up to some questions. So there's not a lot that's showing up, and I think the dojis may have something to do with that. Even the consolidating stocks, there's only 49, and there's a lot of sideways stuff that shows up in the consolidating stocks as well. By the way, over here where it says Elliott Wave Options in this software, since I use it, a lot of our subscribers use it. So the people at Hub were kind enough to create these searches for those that have the software and are alert subscribers with Elliott Wave Option. And all these things are instantaneous. So if I just go boom and click that, you can see that it filters the entire market and gives you instantly pre-computed, that's the name of it, already results. So you don't have to wait for the search to run, but you can create your own search and see what happens if you want. So the CME made a pretty significant downward move today. Really surprising, because this is kind of normally one of the safe havens, because it's like, well, it doesn't matter where the market's going up or down. People are still trading. Trades are still being executed, but big move to the downside today. The issue here, though, is that we're nearing a major point of support right there on the CME. So if it breaks 220, then I'd be interested, because that would be a massive level of support. And you can see what happened back here when we ran to the upside from this area of support around 190. We ran to 220, and there really wasn't much of a correction at all in there. It was pretty much right up. So that means if you break this level here at 220, there's no resistance on the way right back down to that 190 level. So I would make a note on this one that for today, CME, if it were to break below 220 with what? Follow through. So when I say break, that's, our subscribers already know that that's what that means. It's, you have to have a follow through, a confirmation day. So break below 220 with a follow through, a confirmation day. Then we're looking at 190. If that doesn't happen, then and bounces back to the upside, you got resistance at 240. Hey, that's not too big of a move to the upside, but ugly day today. And we'll see if the 220 level can hold. So I wouldn't really be interested in that unless we break 220. If we break 220 with a follow through day, then you've got a nice bearish trade there down to 190. But as far as tonight, I don't think that works. So let's look at some of these consolidating stocks, because there are no impulse stocks, which makes sense. So we don't have any of those. So let's look at some of these consolidating ones, and you can take the 49 and say, man, that's a lot of charts to look at, and come up here and say, all right, let's see if there's any consolidating patterns within a wave three. Elliott would like this, because he'd be saying, hey, you know, that's going to likely break to the upside. Well, there are two. So let's see what kind of consolidation patterns we have in there. Dollar Tree makes sense, right? It's another defensive sector holding up really well. So kind of oblivious, if you will, to what's going on with the market, but not really any sort of a breakout pattern. Nice low ADX, so that part is good. But really, maybe back in here, we could have taken a look at it with an ascending triangle here, with the wave three breaking higher above that resistance at 140. This looks more like a directional trade here, but it didn't show up. So not all of our confirming indicators are agreeing with this, and that's our system. Big believers in Elliott Wave, but we have a set of confirming indicators that back up Elliott Wave to create our technical trading system. And we have education on all this stuff on our website. So visit our website, EWOtrader.com. You don't even have to be an alert subscriber. You can access our education if you'd like, just independently without becoming a subscriber. But if you become a subscriber, then it's free. So it makes sense. It's a less expensive way to be a subscriber, but we feel our content, educational content, is the best out there. We pride ourselves in that. So breaking above 140 here, the target price is up around 160, but so far the ADX is not really too excited about this break above the 140 level. It hasn't really ticked up. We got a little bit of a cross there. The two directional indicators aren't really excited about it. So there's not a lot of momentum behind it. It might be a place just to park money with the craziness that's going on, because you can see at least it's kind of creeping to the upside while the market's tanking. So that's a good thing. But as far as getting to 160, I would have to see some life out of the DMI before I could think that could be a directional trade. The CCI looks like it's building to the upside, so that looks pretty good. Just don't understand why the ADX hasn't turned up a little bit more. Even just looking at 20 would be interesting. So I think we could do something better. So let's look at Rogers, symbol ROG. That's a buyout, so I remember that one from before. When you see a flat line like that, obviously that's consolidation. But when you see that, that's a stock that got bought out. That's a merger acquisition, something along those lines. If you see charts like that and you're wondering, well, it was normal, and then all of a sudden, boom, well, that's what happened. And that's the premium that they paid for it. So the shareholders for Rogers were awarded like $270 a share. And that's why it pegged right there. That's how it works when you have a buyout or a merger acquisition type thing. So nothing there. Let's see if there's anything on a bearish pattern that might be consolidating. Obviously, we have lots of moves to the downside, but there's nothing there. The issue with putting on a strangle right now, so this could be a first where we don't actually put a case study consideration for this week. We've never done that before since we started, but having the VIX at 35 is not the greatest time to put on strangles. 30 is kind of my cutoff. Strangles are great. Enhanced volatility is a good thing. So you could argue that, say, well, volatility I thought would be great because they break out of the triangles. Absolutely correct. The problem is when you get a VIX above 30, now the options become really expensive, and you're counting on a really volatile move to offset the drop in IV. So if you have a triangle and the stock breaks to the upside and it doesn't rocket to the upside, it just kind of breaks off and moves in a 45-degree angle and the VIX tanks, you don't make any money. In fact, you could actually have a breakout and lose money if you put on a strangle when the VIX is really high. So we need to get the VIX back down below 35, and then you can see there's tons of candidates here. If we just bring the VIX down a little bit, you saw the results that when you put one on, with SLV, so you put it on in an elevated market, but you can get in there when the VIX is below 30. You can make some great returns. And I was going to point out that the SLV trade was above average, being above 100%. Usually we look for 30 to 70% gains in the strangles, in the triangle breakout patterns. So getting one over 100%, that's kind of on the higher end of things, but that's what can happen when you're at elevated volatility. And I think we're going to stay that way throughout the year. I don't think we're going to stay above 30 through the whole year, but I think we're going to have elevated volatility throughout the year. Medtronics, just see a few here. That energy, well, maybe we could look at that. It's just this is one I used to trade a lot, Medtronic. So when I saw that, it was interesting to me. Let's look at Diamondback Energy. Lots of pharmaceuticals on there, which makes sense. Yeah, this is more of a trading range, isn't it? Kind of a channel to the upside here than it is any sort of consolidation. So we went sideways for a while, right through there, and then we just kind of broke to the upside. So it didn't really do anything as far as giving us an entry for that. So I don't see anything there either. So wow, there's the Dollar Tree one that we looked at. And I'll just run through the list real quick. Silver's still on here. Wow. That's interesting. Wonder why the SIL would still be on here. Remember, we did SLV. I didn't break out like the SLV did. Oh, this is the miners. That's why. That's right. Look at that. Now the DMI is setting up here. So perhaps the miners trail the metals ETF a little bit, and we start to get a run here. That would be interesting. Interested more in a directional trade out of this because we just did break from that ascending triangle. And that's not much of a follow-through day. You can see where we broke above the level yesterday. When you're looking for a follow-through day, you would have wanted to close a little stronger than that because we closed below the open. Even if you don't get a big up day as your follow-through day, you want it to close above the open. And then that's okay as far as a follow-through day. But it's hard to count a follow-through day when the close is below the open. So, yeah, I don't see anything there either, other than perhaps we could go back and put a strangle on there. Maybe that's the trade, putting a strangle on the SLV, since we didn't really get much of a follow through there. I'm not familiar with how liquid the options are here. Let's take a quick look and see what the options look like. for SIL. Perhaps it does just trail the metal a bit. I mean, I can understand that with the metal going up doesn't necessarily mean that you're going to have a big move out of the miners. Plenty of options, very liquid. All right, so let's do that then. And if the metals were to come back down, then you're covered by having a strangle there. So plenty of options. You jump from April to July, but the spreads aren't wide. So there you go. There is a trade. So that's what we're going to do. We made a note of a watch list trade for CME, but that one's got to break below. But here, SIL as a strangle. So there you go. We were able to find one. Well, that's good because we've never had a TradeFinder where we didn't have a case study consideration. I know that's part of the appeal, why people take a look at it. All right, so we've got a few minutes left here. Let me go ahead and move it over to some Q&A, see what you guys are looking at. We looked at the SPY, QQQ, IWM. I didn't look at the SMH, David, so I'll look at the SMH, but I covered all your other ones there. Obviously, you were asking that right in the very beginning. So let's take a look at the semiconductors. And 260 was an important level that didn't hold. It got broken. So break, follow through. A little bit of a bounce back because we have more support there at 240. And if we can't hold 240, then it looks like you're coming down to 220. So this one's kind of like, you know, how Bitcoin has 4,000 increments. This one has 20-point increments on the semis. The wave, wow, gosh, the wave 5 is right down there. So it would appear that it's unlikely that 240 will hold. So I would say you're probably coming down to the bottom of the tap box around 220. And that obviously is if the market does continue lower. So if that zigzag gets completed, then you're probably coming down to the lower end of that tap box range, somewhere between 220 and 230 on the semis. But it could hold 240 if you're long. Give it a chance and see. There's no guarantees that the zigzag pattern falls into play. You know, it's a great pattern, and I really feel like 400 is a distinct possibility here on the SPY, but as you know, there's no guarantees. So you look at each individual chart on its own merit. So looking at this, I would say that if it breaks below 240, it's probably going to 220. But if it can hold here, then it's got to get back above 260 because there's a ton of resistance there. So breaking below 260 was a problem for the semis. So it's got to get back above 260. And I know a lot of people have been talking about the semis, and we all know there's a chip shortage, et cetera. So why are they having such a hard time with everything that's going on? There's a zigzag there as well. And it's just because when the market makes these big moves to the downside, talk about, oh, look at that. Talk about throwing the baby out with the bathwater. There you go. Look at the zigzag. It's the exact same target as the bottom of the wave 5 and that 220 level, which is support. So, man, I would say there's a great chance that the SMH is going to 220. Now we have another pattern, the zigzag pattern, that's giving you that same target price there. So I think that that occurs. I'm just looking at this headline here. Russia promise. You get news that comes through Reuters with the software as well. So it kind of keeps you updated on what's going on. Russia promises silence for the Ukrainians leaving battered cities. Well, they've broken that word twice, so I don't know how much faith I would put in the fact that they're going to have a ceasefire to let the Ukrainians leave. They want to. They've said that twice already. It's the third time now, and they didn't honor the previous two. So anyway, getting off subject here. With the market being so volatile, James is asking, how do you use the software to find bearish candidates? That would be under the corrective mode here. Corrective stocks, you can have corrective patterns that are both bullish and bearish. And so when we looked at the CME, that was clearly a bearish pattern. Remember Dell? Dell came from the bearish search. We looked at that one a few weeks ago. That was a bearish search. So that's how you use it under the corrective search pattern here. And if you aren't a EWO subscriber, then you would look at a wave 4 sell trade, so a downside 5-wave impulse pattern. But if you're an Elliott wave option subscriber, then you look at the corrective search, and that's how we found this. But again, this one needs to break 220, and but we found Dell, which obviously would have been a great one. XLE. A lot of people asking about wheat lately, so we can take a look at that. You know, how far can this go? The XLE hit the 61.8% level right at the top of the tack box. Could it go higher? Absolutely. Is it overbought? Yeah, it's overbought. I think oil is overbought as well. We did send out, let's take a look at that because I want to show you that. So similar story here. See that perfect doji there and how overbought we are? It's gone so vertical. It's above the 10-day moving average. So we have puts now on the USO. I'm not feeling like there's a big downward move in oil coming. Don't misunderstand. That's not looking for a big move lower. It's just a quick speculative trade on closing the gap with the 10-day moving average, saying that we're way overbought with oil and we need to pull back a little bit. That's all that is. And I'm hoping that doji signifies that. So tomorrow we're likely to have either a significant down day in oil, or we could have a significant up day, and then we'd be wrong on the puts. But we're overbought. We've gone awfully vertical. And normally when things go straight up, what happens? You know the drill. Come straight back down. Look at the intraday chart of the market today. When we had that intraday rally, it was almost vertical. And then what happened? It came right back down. It retraced the entire move, and then we ended up down on the day. And we had a really big rally. The SPY was up 75 points at one point in time. Anyway, so and then wheat. So we'll take a look at grains. As you know, a lot of wheat comes from that area of the world. So we'll see what it looks like for wheat. Goodness. Talk about overbought. See that if that happens in oil, then you're totally wrong on the oil trade. But I would say that wheat is a bit overbought right now as well. So stuff just doesn't do that and hold in my experience. When you go vertically like that, there's some sort of a corrective move. It doesn't have to. It can go sideways, which some people view that as a correction as well. Like if you go into a triangle, that is a correction. So if you were to do something like this from here, then that's a corrective move. Coming back down towards the 10-day moving average, in other words, more of a directional correction, coming back down rather than a sideways one like a triangle. But when you go vertically like that, nothing goes straight up forever. It just doesn't. I'm shocked that it's gone straight up that long, but that looks like to me that wheat needs a breather. And whether or not, if it's a pullback or not, I would say at some point, the war ends. Well, hopefully it does. And things come a little bit back to normal. So could wheat prices stay elevated? Yeah, certainly they could. But like that, when you have something vertically like that, I look for it to come back down. Yeah, the death cross in the Dow, which is the 50-day moving below the 200-day. Kev is saying, yeah, we have a confirmed bear market now, which we do. Is UNG breaking out? We didn't look at the XJO. I'm sorry, Kev. Left that one out. We'll take a look at that. Is natural gas breaking out? Well, you would have thought that it would. I thought we had a bullish trade on UNG and we closed it out. I thought maybe we closed it out too soon, but you can see it's not followed oil with the move to the upside with the Russian invasion. I thought we were coming up here, and our subscribers know that. I thought we were going to come test this high with this move up, and it didn't happen. We still were able to, it looks like we exited at a really good spot because we exited it right when we hit this resistance here, thinking that, well, maybe we're not going to go up there, because I would have thought we would have been there already just with like what's happened in oil. So I don't think, there's a doji there too. Man, this is doji day. That should be the title for this TradeFinder. Today's doji day. They're everywhere, as you've seen. So all it tells you is something's happening tomorrow. There's going to be some movement tomorrow. I don't know if it's up or down, but we're going to have a decent volatility day tomorrow. Again, it looks like with this. So you can see this setup here at 17. It's got to get back above 17 before it has anything bullish going on. And I don't know. I don't get the whole natural gas thing. Like I said, I thought we were going to test 19 and probably break it and go test new highs. It hasn't happened. I know Europe shorts natural gas, but with the war, I really thought we'd see a bigger spike. Maybe because we're coming to the end of wintertime. I don't know. I don't understand that one. So that's why I haven't done anything else with it. So let's look at XJO. And there was the big triangle that we broke out of. And we broke down, no follow through day, came back up and tested the breakout, back down, and just kind of trying to hang around in this 7,000 range, which is a big round number. So it's trying to build some support right there. You can see there was a little bit of it in the formation of the triangle. So it's trying to hold there and see if it can break back above it. If it breaks below this, then we're coming down here to test that low. There's nothing in the way. So if it can't hold right here, we're going down to test that low. If it can hold there, but it's already retraced the breakout, so it's already done that part of the job. Breakouts of triangles get retraced. So kind of a in-between phase, I would say, on the Aussie market right now. I would be in more of a wait and see mode, whether or not these would be the levels I'd be watching for. A break above the point of this triangle for something more bullish, a break below where we are right now for a bearish move down here. But right now it's tough to pick. So those would be the levels that I would be looking at. DIS. And Disney's trying to hold here at 130. It needs to hold that level. Really needs to hold that level for the Dow and everything. If it doesn't, then 120 is next. So if it can't hold at 130, then 120 is the next level of support. And it looks a little oversold, not a whole lot, but a little bit oversold there on the 130 level. So perhaps we get a little bit of a bounce. Maybe we're going to have a little bit of a bounce tomorrow. Maybe that's what's going on with all the dojis, as we get a little bit of a bounce. Merrick is saying with high IV, time to sell rather than buy. You can put on, see, what the problem with that is if you put on like credit spreads, with credit spreads, you're taking on more risk than you can make. I agree with that when times of elevated volatility, but just remember that you're elevating your risk too. But if you got a big spike, then, if you were a person that likes selling puts or whatever, then that would be an opportunity to do that. So BK, Bank of New York, and it just really surprising to me that the financials have not held in there better. So, we're hearing all that the economy is okay with all this stuff that's going on. The financials are not showing that. I get that we had a little bit of a pullback in interest rates due to the fact that money flew into bonds as a safe haven, but this is not indicative of the health of an economy. When interest rates are going up, that's what the financials want. They want interest rates going up. They want the spreads widening. That's golden for them. And so I can understand why they're not making upward runs like this. But I would think that they would be look more like the IWM rather than tanking. They're just tanking. And so when you have elevated interest rates and the financials are getting crushed, that doesn't sound good to me from a fundamental standpoint for the health of an economy. And perhaps this inflation is just going to eat away at the consumer's buying power, et cetera. Fewer loans, I don't know, but I can tell you that seeing financials do that is not indicative of a healthy underlying economy. So that puts the fear of stagflation back in there. Nicholas was waiting for a UNG entry. Let's look at the weekly on UNG. We'll look at VGK. So UNG on the weekly chart. So more long-term, that's a nice strangle. Is that what you're looking at, Nicholas? Because that's a great looking strangle right there. And longer term, remember we talked about this with strangles on the weekly chart. We've seen a few good patterns there. The 5-wave impulse pattern is disqualified. The wave 4 is too far down. So that's disqualified. So you can't look at that. So it's a strangle. You know, if you wanted to put on, like Pankaj usually ask about leap trades, a leap strangle, but it's got to move. The issue with that is you're paying for so much time, it's got to make a significant move. So that's the trade-off there. So it's not as easy as just going and putting on strangle patterns way out in time. If it was, that's all we do. If it was that easy, I mean, we wouldn't even trade anything directional past this. Futures are up 81. Okay, so futures are up a bit after market. So VGK here, let's take a look at that. Oh, ETF on the FTSE. And man, I would imagine that market is pretty scared being over in that part of the world right now, especially when they attack that nuclear plant. And I was going to talk about this, you know, I was reminded in the past TradeFinder when people said, what could be a black swan for this year? And with interest rates, everybody knew about that, et cetera. I mentioned war, and that's come to fruition that could be an issue. I don't think a lot of people really thought Putin was going to do it, but you've heard me say that I really did. I really felt like he was going to invade just because of ego. And the more the media built up, are they going to do it? They're going to do it. It almost forced his hand. So I wasn't surprised at all of the invasion. So now the commentary that was on the financial networks today is the war's not going real well for Russia from all accounts. Would he resort to nukes? I'm not as confident that he would do that as I was that he was going to invade Ukraine, but I wouldn't rule that out. And man, you want to see a downdraft in the market, he launches a nuke, then watch what happens to the market. It could be one of the worst days in history for the financial markets. So back to the Europe ETF, it's got some support here at 55. Maybe it tries to hold. It's got a good wave 4 correction here. So if it's going to make a stand, this is it. It's oversold too, by the way. So perhaps you get a little bit of a bounce, at least a little relief bounce out of the FTSE. Maybe we head back up towards 60 at least. If it can't hold here, then that's bad, because then you retrace this entire move. So that means we're coming down to 40 if we can't hold that. Goodness. Energy fuels. And it's right in the wave 5. We've exceeded the wave 5. We're trying to come back. Is that a zigzag? It might be interesting if that's a zigzag pattern here, because the wave 5 now it's disqualified. I would be nervous about. See, I still think oil needs a rest. Natural gas hasn't followed through like thought it would. So that natural gas triangle may be a downside breakout. Maybe that's what you were looking at, Nicholas. I do think Putin's desperate pet. I agree with you, and he can't lose, right? I mean, I think the way he looks at this is he can't lose this war, but he might. So SBSW, it's overbought. There's resistance right here. So if it can break above 20, then you may have something going. Hasn't been around that long. but it's overbought right now. So be careful about that. So if you're long, I might look to take a gains or at least tighten up stops. But if it breaks above 20, then it's, who knows, it's clean air. It's who knows what happens if it's able to do that. The DMI looks supportive of a potential break, but not right now because it's overbought. So it needs to consolidate, but a break above 20 would be interesting. All right. So thanks, everybody. Appreciate it. All you watching on the live stream services, we appreciate you being here as well. Hope you have a great rest of your week. Again, we appreciate your time very much. We value everybody's time. Time's the most valuable asset we all have. And we appreciate when you spend some of it with us, and we try to make it as educational and informative for you as possible.